When we think about financial markets, it's easy to just picture chaos, right? This massive, unpredictable ocean of numbers. And our first instinct is always to try and predict where that next big wave is going to crash. But what if that's the completely wrong way to look at it? What if the key isn't about predicting the waves, but actually understanding the ocean itself? Let's dive into that idea.
So, does this feel familiar? You're staring at a chart, trying to guess what's going to happen next, feeling that stress with every single tick up or down. It's an exhausting game, always chasing a future you can't be sure of.
Okay, but here's a totally different way to think. What if, instead of trying to predict the weather, you had a detailed navigational chart of the ocean, a map that actually shows you the currents, the depths, the safe passages, giving you a crystal clear picture of where you are right now?
And that is the huge idea we're going to dig into today. A really fundamental shift in thinking, one that was pioneered by an analytical system designer named Somu Sundaram. We are moving away from the guesswork of speculation and toward the clarity of structure. I mean, this just lays it out perfectly, doesn't it? On one side, you've got the old way, speculation. It's all about guessing, making decisions based on emotion, and constantly chasing those crazy, unpredictable waves. But on the other side, you've got structural analysis. And this is all about understanding the present moment, making decisions based on logic, and navigating the currents you can actually see. It's a total game changer in perspective.
And it all boils down to this one simple, powerful phrase: structure over prediction. It's not about having some magic crystal ball to see the future. It's about having a really, really good map to understand exactly what's happening right now.
So who even makes these kinds of maps? Well, this is the work of what's called an analytical system designer. This isn't just another trader, it's a specialist who builds these tough, objective frameworks. The number one priority is making sure the logic holds up. It's not just about trying to guess results. They're basically the architects behind these intelligent systems.
All right, so if you're not trying to predict the future, how in the world do you actually draw this map? Let's take a look at the tools this modern market cartographer actually uses.
Well, the very first step is to bring some order to all that chaos. You take market behavior that looks totally random and you classify it into 5 distinct, recognizable phases. You've got accumulation, that's where interest is quietly building up. Then comes the advance. After that, distribution, as people start selling off, which is followed by the decline. And finally, you have a period of transition. See? By categorizing the action, you start to see a structured process, not just a bunch of noise.
But that's just the beginning. Other tools are used to add even more detail to the map. For instance, cycle phase models treat market movements like a repeating 360-degree cycle. This is super helpful because it tells you where you are in the bigger picture, instead of just staring at the last couple of price bars. You combine that with things like gap analysis and pivot logic, and suddenly you're building a really comprehensive picture from a bunch of different logical inputs.
Okay, but how can you actually trust the markers on this map? This is where the idea of a non-repainting indicator is absolutely critical. Think of it like a buoy in the ocean. Once it's placed, it doesn't move. An indicator that repaints actually changes in the past to look better, which makes it totally useless for making real-time decisions. A non-repainting one ensures that what you see is what you get. It's all about trust.
So, after all that, all these phases and cycles and indicators, what's the point? What's the final objective here? It's actually about radical simplicity. The goal is to take all of that complex, messy data and distill it down into one super clear, high-level framework. Is the market's current structure bullish, bearish, or neutral? That's the clarity this map is built to give. Now, where does something like artificial intelligence fit into all this? Well, this is where the approach gets really interesting. Because in this system, AI is not treated like a crystal ball. It's treated as a co-pilot.
Let's just cut right through all the hype for a second. The common view of AI in finance is that it's this black box that just spits out answers with zero explanation. But the reality in this system is completely different. Here, AI is used as a reasoning collaborator. It's a partner that helps you stress test and refine your own logic.
So how does that partnership actually work? Well, the AI stress tests the analytical models to find weaknesses. It helps translate a human's observations about how the market is behaving into clean, logical rules a machine can understand. But most importantly, it's all done without creating a dependency on some black box. The human analyst is always fully responsible for the logic. And this quote just sums up the whole philosophy perfectly. AI enhances structured thinking. It does not replace analytical responsibility. It's a tool to make your own thinking sharper and more powerful, not some crutch you lean on to avoid doing the work.
So let's bring this all together. What is the ultimate benefit of building and using an objective framework like this one? Really, it's all about being able to navigate with genuine clarity. At the end of the day, it all comes down to this one single goal. The entire system, the mapping, the phases, the collaboration with AI, it is all designed to do one thing: remove all that emotional and cognitive noise from your decision-making. It's about separating your analysis from your anxiety. And these are the core values that make it all possible: objectivity over opinion, structure over prediction, logic over belief, validation over just making claims, and so crucially, ethics over all the automation hype. This isn't just a trading system. It's really a philosophy for intelligent, responsible analysis. And look, this isn't just some nice idea in a vacuum. These logical frameworks are put through the ringer. They are rigorously stress-tested across a bunch of different real-world markets, from India's NSE to Japan and Korea to China and Taiwan, just to make sure that the structural logic actually holds up under all kinds of different conditions.
So we've spent this time talking about financial markets, but I want to leave you with one last thought. What if the real lesson here isn't about trading at all? What if the true takeaway is about the power of choosing structure over prediction in all of our most important decisions?